Hey everyone, glad you're here. Quick question, has your local bank branch shut down lately? Maybe fewer tellers, more machines. You're not imagining it. Banks are closing branches at a pace we haven't seen in decades. Just this summer alone, 74 branches shut down in only 6 weeks. And it's not just small banks. Chase, Bank of America, Wells Fargo, all on that list. Some experts even say the very last branch could disappear by 2041. That's not far away. So let's break down why this is happening, who's hit hardest, and what it means for you. First reason: technology. In 2009, branches were everywhere. Today, almost everything's done on a phone app. The pandemic supercharged that shift. Snap a picture, deposit a check, done. For banks, branches are expensive: rent, staff, security. If fewer people walk in, it's tough to justify. Second reason: money pressures. High interest rates, inflation, slower growth, they all eat into profits. Cutting costs means branches get the axe. Third reason: regulations. After 2008, new rules made banking safer but also pricier, especially for small community banks. So closures hit them the hardest. And sure, banks have to give notice before shutting down. But let's be honest, 30 days isn't much comfort if your nearest branch suddenly moves 20 or 30 miles away. For older folks without internet, that's not just inconvenient. It's isolating. That's how we get banking deserts. Between 2019 and 2023, hundreds popped up, leaving more than 750,000 people stranded. Not just rural areas, even suburbs are feeling it. So what are banks doing to fill the gap? Some roll out mobile branches, buses with teller windows. Others push fancy ATMs where you talk to a teller on a screen. And of course, the big push is digital. But here's the twist: not all banks are shrinking. Chase plans to open 500 new branches by 2027. Bank of America wants 150 more. These aren't the old-school teller lines. They're advisory centers, mortgages, small business loans, financial coaching. So branches aren't dying. They're changing. Policy adds another wrinkle. Some rules have been rolled back, reducing pressure on banks to serve low-income and rural areas. That could widen the gap between communities that have banking access and those that don't. So what does this mean for you? If your branch closes, you'll get notice and digital options. But for small businesses and people who rely on face-to-face service, it's a major disruption. Credit unions and community financial institutions may step in, often with extra services and more personal support. Here's the irony. Even in a digital world, nearly half of Americans still prefer banking in person. Because banking isn't just about money. It's about trust. So what's next? Think fewer but smarter branches. Think AI, mobile apps, and video banking doing more of the routine stuff. And think about how we make sure no community gets left behind. Because this isn't just about banks saving money, it's about people's lives and financial security. If you've noticed changes at your local branch, drop your story in the comments. And if you found this breakdown useful, hit subscribe, like, and share. It helps us keep these conversations going. Stay tuned. There's always more to uncover about money and how it shapes our everyday lives.